Hope everyone's had a really good weekend. Coming to you tonight with a few questions that have been asked of me during the week, and if there's any that come through during the live stream, I'll happily answer them. So if you do have any questions, please feel free to ask. But as usual, please feel free to, private message me, and I can get out to you or get back to your questions after the live stream. Been and seen a couple of clients that I've only met through Facebook and doing the live streams and the question and answers and helping them with their properties. I was at someone's house yesterday giving them advice. So look, it's really been helpful for a lot of people. So I hope you do find it helpful, and I really look forward to meeting new people and helping them out with their property goals. And a lot of people don't like asking questions in public. So if you don't want to ask tonight, please feel free to ask private during a private message, or you can always call me, or just basically send me an email and we can catch up and do it in private if you'd like. So look, it's been a really good weekend. After Easter, obviously, and the school holidays was the first week back. We had a busy day of open houses yesterday with good numbers for all properties. I worked all today. We've negotiated a deal and put one under contract. The property hasn't been on the market that long. So, very happy buyers, very happy sellers. More news to come on that. So haven't had a day off this week. So looking forward to the week ahead. We've got a couple of questions to start off that came through before the live feed, and they've come through during the week. I think even some of them came during Easter. So I'll get Sam to ask some of those questions.
One came through during Easter from Lisa.
Hi Lisa, hope you're listening tonight.
Would you recommend getting a formal valuation done on your property before taking it to market?
Okay, so Lisa's asked, would I recommend getting a formal valuation done before taking it to market? Lisa, look, you can by all means get a valuation done, prior to taking the property to market, but it's very hard to say. Look, and with banks the way they are at the moment, and a lot of lenders, they may be a little bit on the cautious side, and the valuation, I've seen some valuations that are higher than the property value itself, or what the market's willing to pay. So it's a good point you've raised, Lisa, because straight away I can let the viewers know that there's market value and there's a registered value, which is done by a valuer or the bank as such. So it doesn't necessarily mean they're going to be the same amounts. Sometimes the bank, being this one, might be a little bit lower, and the market might be willing to pay higher. But sometimes, if the valuers don't get it right, which look, no one's perfect, so we don't, get it all right all the time. You might have the valuation, be a little bit higher than the market's willing to pay. So you could definitely get it done. It just doesn't it's probably not going to be reflective on the market, and it could be quite costly. Again, if you're doing valuations for refinancing and stuff like that, yes, it's definitely beneficial, but I don't see a massive benefit in doing it while or before you take it to market, because the last thing a buyer really cares about, to be honest with you, is flushing a valuation of the property in front of them to negotiate on price or to prove that the property's worth that much. And if it goes to auction and you've got the highest bidder basically sitting there, and that's the market talking, well, yeah, I just don't see much point in it. So look, if you're doing it just for you just want to get a guide, the best way to do it is interview a couple of agents or people that you respect in the field, and that will probably get a similar result. But a good question, and a lot of people do ask it. So thanks, Lisa, very much for your question, and we'll move on to the next one.
Next question is from Mark.
Hi, Mark.
I bought an investment property that needs a lot of work. What are the areas that you foresee will add the best possible rental return?
Okay, Mark, so with your investment property, adding value, look, I would for rentability, I'd definitely be looking at your kitchen, your bathroom, your living areas, bedrooms, look, size of bedrooms, cupboard space, look, they add a little bit of value. Rentable properties, in my history of buying and renting my own properties out, and obviously we've got a property management division, I find that the kitchen, the bathroom, the living area, the deck, if it doesn't have a deck, I'll put a deck on it. And I'll definitely work on the living and kitchen areas, because I said a few weeks on a podcast a few weeks ago that you've got to look where people spend most of their time. People do spend a lot of time in their bedroom, but it's not the main area of the house, and it might be large and it might be great and might have a great aspect, but people spend more time entertaining and in the living area. That's what's called the living area. So people spend a lot of time there. So I would be spending money in kitchen, bathroom, living area, deck. I'd give it a splash of paint. Just treat it like a car. Like, people are going to want new and they want something that's fresh. So if it's got daggy old carpets, maybe see what's underneath. If they've got floorboards, rip the daggy old carpet up and do the floorboards and give them a nice polish. So that definitely helps. So I would be focusing on the main living areas, Mark, and not worrying about the little things like the bedroom size and all those sort of little things that aren't going to add a terrible amount of rent. Maybe even give it a little bit of wow factor. When it comes to renting properties, I find that it can be the difference between $50 a week or $100 a week, and over a year that's $5,000 over a year. So you might think that little increase in rent isn't too much and it's not going to make a massive difference, but if you add a little bit of a wow factor, tenants become impressed. Now there's a lot of properties up for rent at the moment, so you've got to stand out. So if you make it a little bit of a wow factor, if it's a kitchen, or the living area, and make it stand out from the rest, you've got more chance of getting a tenant in and getting the optimal amount of rent. And I'm just finding that those properties are renting really well, and I think that that's where your money should be spent on your property, and just make sure that every dollar counts. And obviously there's tax benefits for you, and it will also add value to your property as well. When you go to sell it or live in it or hold on to it, it's going to become an easy property to rent, because the last thing you want is to have an investment property that's not returning you any income, because all you're relying on then is capital growth, and obviously the tax benefits don't come in if your property's not returning any rent or actually having any tenants in there. It just doesn't become a viable option. So I hope that helped you, Mark, and we'll move on to the next question.
I've got a question here that's just come through from Scott.
Yes. Hi, Scott. How are you?
Is air conditioning a key thing that tenants look for?
Yes, definitely. Scott's asked if air conditioning is a key thing that tenants look for, especially with the summer that we've had, Scott. I don't know about you, but mate, I sweat like no tomorrow. It's, we live in Brisbane, it gets hot. I think we get cold for about 3 months of the year, 2 months of the year, and even out of that, I think, there's only a few weeks there that are really cold. So air conditioning, definitely another plus. Definitely added onto your property, adds value to the property. Back in the day when I first started buying properties, which was in the early 2000s, as I said, I bought my first property in the year 2000. Air conditioning was a lot more expensive back then. To having it was more of a luxury. I think, again, when you're competing, like I just said with Mark's question before, when you're competing with other properties, and yours has got air conditioning, the other one doesn't, and they're both the same amount in rent, they're going to go for the one with the air conditioning. So definitely money well spent, and as I said, I know with myself, I'd definitely be looking for an air conditioned property. Got another question there coming through.
Yeah, I'm just double checking. So there's a question here from Andrew.
Hello, Andrew.
What's the advantage of auctioning your house versus private treaty?
So Andrew's asked, what's the difference between auctioning and private treaty? Look, there's a number of different factors, and I will go on, this on one of my, Sunday night talks in the near future. Look, it depends on the property. It depends on if the property's been to market before and the experiences. I personally do both, private treaty or auction. If you have a large amount of interest in a property, the auction process definitely works because it creates competition, which in turn, knocks the price up for the owners, which is, the end result that they're wanting. It depends again on the property, as I said. If it's a unit at the moment, which is a very tough market, I wouldn't be recommending it. I think a price, and I think a very achievable price, being in line with the market. So with regards to auctioning and private treaty, they're good for certain properties, but definitely, like when I go myself into selling my own properties, or hang on to a lot of them, but when I have sold, I view that every property is different and everyone on their own individual case. So not every property is just auction and not every property is just private treaty. So you just got to pick and choose which ones you do. Your older style ones and renovators, they seem to go off at auctions. I don't know, and blocks of land seem to be highly sought after. But you just got to pick and choose. It's not one size fits all. So it's a great question, and thanks very much for that. But realistically, the auction process works, and so does the private treaty. So depends on your property, depends on the experience. Some people are pro auction, some people aren't. Again, as I said, from my experience, I've sold properties myself. Both, and at the moment, with regards to the properties I have on the market, some are auction properties and some are private treaty. Depends on what the owners have been through, and some owners, we've auctioned their property and they've had some bad experiences and they've got a great result, and vice versa. Some people that have gone through an auction campaign and decided that they might just want to put a price on it and sell it and negotiate from there. So both methods work, and I support both methods.
I've got a good question here from Will that's just come through.
Hi Will, hope you're well.
How did you get started in the industry? Any advice for someone who wants to pursue a career in real estate? Okay,
so Will's asking how I got started. Okay, Will, I got started in real estate in the year 2000. Basically step back, I went to Nudgee College, nice rugby school up here. I know they do schoolwork as well, but rugby. So I played rugby straight out of school. I was a groundsman at Ballymore for while I was in what's called the Reds Rugby College. I always had interest in property. Mum and Dad used to sell and buy and sell a few houses, so I got to meet a few agents throughout the time. And what got me into real estate was one of the rugby players that I was with in the Queensland Reds, Damien Smith. He basically, taught me a lot about property, and I was on one of my first tours, and I remember it was in Hamilton in New Zealand, and we got talking, and he said, as soon as you get your first contract, we'll go out and buy you a house. So, true to his word, when we got back, I signed my first deal and first contract with the Queensland Reds, and went out and I bought a unit, actually, funnily enough, in St Lucia. So I bought that unit first. And then, look, I was up to date on reading a lot about, how people buy multiple properties and use the rental income and use the equity to, go and buy another property. So it was within 6 months, I bought my second property. That was a house at 13 Glenmire Street in Paddington. So I used the equity. So I basically moved into the unit, bought that, used the equity, so the property market was moving at a good pace. I was paying down as much debt as possible. I put some tenants in the unit, used the equity, bought the house in Paddington. The house in Paddington was terrible, needed probably a large amount of money spent on it, but I did all the work myself. I'm not a handyman, but I did the painting, I did the floors, I did everything on weekends. So any spare moment, I'd do some work on that house. That took about 3 months out. And then I basically, kept on buying property, using the equity and buying properties after that until I got to 25 at one stage. So in that time, I met a lot of agents and stuff like that. So that sort of was basically, I already had a love of real estate by buying my own properties and, doing them up. So as well as doing the development stuff and buying and accumulating property, by myself, I thought, well, I really like this game, so I got into real estate and got a job at an agency which was PRD back then, and started from there. So I was playing rugby, and I was also doing real estate at the same time. And back in those days, we used to have the rugby games, the club rugby games used to be on a Sunday. So they're on a Sunday, and I'd do work. So I'd go to the gym in the morning. During the middle of the day, go and do real estate, and then look at my own sort of personal purchases and houses, and then go back in the afternoon and finish off with training. So I'd do that every day instead of just sitting around and playing Xbox or something like that. Was putting it to good use. And then on Saturdays, I used to do some open houses. Depends where we're playing. Obviously, when we were playing football overseas, I didn't do it. Didn't do open houses. And then play football on Sundays, and then cram in some real estate on Sunday nights. So I was working 2 jobs. And back then, the wages were decent, and property prices weren't as high as they were now. But don't get me wrong, it was still hard to to balance everything out, and I was run off my feet. So for about 3 or 4 years there, I was working 7 days a week, because I knew I had this goal in mind. I wanted to have a certain amount of properties. I wanted to have a certain amount of wealth, and I wanted to have a certain amount of clarity around my life moving forward. And I knew that the foundations that you lay when you're young, and I don't know how old you are, but mate, I can tell you now, if you lay the foundations when you're young, it definitely makes it easier when you get older, because you would have built up equity, and you turn around and, believe me, 10 years flies like that. I'm talking about, I've been in the game now, this is my 17th year, and it feels like yesterday that I started, and I still feel like a young man, but time flies. And what I used to pay for properties was nothing compared to now. As I said, my first house in Paddington, I paid $287,500, and my first unit I paid $140,000, and they were all sold along the way. And I've picked up some some different properties, and Sam, my wife, and I bought our first commercial along with my business partner. We bought our first commercial property last year, which is a large one, and that's quite expensive, and we're going through the plans and what we're going to do with it right at the moment. So yeah, so getting started in real estate, I guess my tips are to sort of you got to have a passion for it. You got to love it. I love it. I love it a bit too much sometimes. I was working today and cheekily sold one. So it's a very rewarding job. But I'm happy to catch up with you if you want any further advice on that. But yeah, look, it's just basically go along to some open homes and see how the agents are, and see if you do like it. But I guess I got into real estate through those means of just buying my own properties, and then fell into it by thinking, well, I'd make a good agent. So yeah. Next question.
Next question's a long one, from Luke Fitzgerald.
Yep. Hi, Luke.
You are advising first home buyers to steer away from units. How far below market value do you think it is worth going for a unit in the Brisbane CBD? If there is a drop in the price over the next 1 to 2 years, what do you estimate being as a percentage?
Yeah, Luke, with regards to units, what I was saying last week, and what I've been saying, is that the $20,000 that you're buying off the plan, I mean, look, there was an ad in the paper last week with properties being sold, I believe it was about 30 to 40% below what they were selling off the plan a couple of years ago. So say if you want to put 10% deposit down, let's look at, say, a $500,000 unit. 10% deposit's 50 grand. You're going to get 20 grand as your first home buyers. So you're still going to have to stump up with $30,000. Now, if that comes down, and comes down dramatically, like everyone's predicting, not just me, if that comes down a fair bit, you're basically going to be tearing up that $20,000. So yeah, look, it's hard to predict, and if I had a crystal ball, I'd probably think it'd be somewhere around the 20 to 30%. So yeah, so as far as what I see where the market's going to go, it's very hard. So Look, I just tread very carefully if you're looking to buy something in a city in Brisbane. I've got friends that have been selling for years, and they've been selling in the inner city, and the market isn't a strong market, and they don't transact unless, because you think about it, Luke. So, like, say if there's a new building being built here, and you buy one in here, and then you settle on it, then there's a new one being built over here, and they're exactly the same product, and they're, very similar in size. People are going to start going for that. This building over here instead of this one here. So I just think there's too much same competition. The other thing is, if they're in a city and they're large and they're big units or big unit blocks, so say if there's 200 units, if someone gets in financial strife, and it's no fault of your own, obviously, or no fault of anyone else's, and they have to fire sale their unit, well, all of a sudden, everyone's perception of your unit is, you bought it for 500, someone had to sell it because they got into financial strife for 350, and all of a sudden, when buyers come along and look at your unit, basically they're going to think it's worth 350,000 because of the last sale in the building. So that's my personal opinion. But look, if you've got another opinion, I'm happy to hear about it. But I just think there's better ways that you can invest your money than maybe an inner city unit when there's going to be an oversupply and lack of demand. It's just going to put yourself basically in a bad spot. So smaller unit blocks, don't have as much a problem with. But yeah, I'd be steering clear of the inner city market just for the sake of getting your first home buyers. Next question.
Next question is from Chris Belford.
Yes.
What impact, if any, does a messy/rundown neighbour have on a fully renovated post-war home, currently in an older suburb with early 70s builds?
Yes, so Chris has asked about neighbouring properties. That's a really good question. Mate, look, I've had it before where properties, you're right, like there's been a nice property and next door's an absolute dump, and it's had like abandoned cars in it, and it's had, like an old shed that's falling down. So yeah, look, it definitely impacts on it. People can look past it. I've joked around with some people saying that they could just try and buy the property next door if they've got enough money. It might make theirs more profitable and make the land a bit bigger. But yeah, it definitely impacts it. But look, if I go to sell a property and the neighbouring property's a dump or it needs a fair bit of work, we've suggested that the owners will pitch in and do some work to the property, as in maybe do the garden for them, clean it up, or, get the rubbish out of there and, just make it for the presentation. And it's a good sell for that owner next door, because you can say to the owner next door, well, the more I get for my house, well, the better it's going to be reflective of theirs. So often these people are pretty messy in general, so it's definitely one to look at doing to clean it up, because it definitely does impact your price of your property. And if you're a potential buyer and you're looking at your house and then you look at the house next door, one's in the street and they're all crap, and they're all really messy, I think it's really going to put buyers off, and it will have an impact on the price. So yeah, I'd be having a word to your neighbours, and I'd be offering them, a little bit of money, as in, to help them clean their property up for yours to go to market. So I hope that helps.
A question here that's just come through via your inbox from Stephen.
Yep.
I want to build a property portfolio. How do I do this?
Okay, so Stephen's asked a pretty broad question. How do I build a property portfolio? Stephen, just start with one. Look, don't try and think too far ahead. It's not a race. As much as you want to get into the market and move things along, you've got to be educated. If you haven't bought a property yet, don't think about buying 10. Think about buying one. Just think about your first property and think about that and focus on it. Buy it well, research the market, make sure that you're paying the right amount of money for it. Just don't spend too long doing that. There's a lot of people that procrastinate and they just think about things too much, and they want to get a guide on the market, and they go to a few auctions, and then all of a sudden you still see them in 12, 13, 14 months, 2 years later, and they're still looking. So I think about your question being, how do you build a successful property portfolio? Start with one and then move forward from there, and then two, and then concentrate. So do it slowly in the way of just concentrating on your financial situation and if you can actually afford to keep progressing. But start with one property, and don't be one of these gunners, these people that are gonna buy a property and they're talking about, you know, buying a property for years and getting in the market, and they're looking 2 or 3 or 5 years away. So, you know, basically just get in and buy a property, make sure you're doing the right thing and paying the right price, and then sit down, talk to your accountant or your advisors, and then work out a plan from there. But it's too hard to basically, to work out a portfolio when you haven't even got a property yet. Focus on buying one. Another thing I just wanted to touch on was, I got asked during the week as well, with people, what's the best way to, to do up their property to sell, and, what value they can add. I've got it. I think the biggest thing is, and the biggest bit of advice I can give for some sellers out there at the moment was, think about what a buyer would want. Think about your property. Think about where it's situated. Think about the market that you're trying to hit. Is it in a great area with great schools like we're here in Paddington? We've got Milton State School down this way. We've got Rainworth down that way. Think about basically what sort of market. Is it a family area? Is it a young and up and coming area? Is it an area that's got some development potential? And think about the market that you're trying to hit. And, like I see it all the time, people, they walk me in and, you might have this great crazy pink wall or flamingo or something hanging out of the house. And, and it could be like that's part of the wallpaper. But think about the buyer. So when you're selling your home or when you're looking to sell, put your hat on, your buyer's cap on, and think that you're a buyer and think, what would I want in this area, or what would I want to see as a buyer? It's a very, very easy philosophy to follow. Put your buyer's cap on and think of yourself as a buyer. It's very easy to do. Think about who the buyer's going to be. Think about what market you're trying to hit, and hit that market very hard. And basically do to your property what that market wants. If it's a family home, they might want more yard, they might want more room. If it's a downsizer, your property's on a smaller lot, you got to think it's probably going to be someone selling their great big house, downsizing. They may not want to move into a unit, they may not want to move into a townhouse, but they want a low maintenance house. So limit the amount of grass, limit the amount of space that they got to maintain. So again, getting back to that question, put your buyer's cap on and think about who will be buying your home, and get your property styled. If there's any work that needs to be done, get it all done to make sure it gets maximum exposure to that sort of market and that sort of buyer. Because I see too many people miss the mark and, market a home that's a great big family home, but then they're marketing it as to older couples that the kids have moved out. So pick your market and make sure your home fits that market. Look, I think that covers all the questions tonight, and I hope everyone enjoyed it. I look forward to seeing you next week, and I hope everyone enjoys and respects the Anzacs on Tuesday. It's a very touching day for Australia, and I hope everyone has a good week ahead, and I look forward to seeing everyone next Sunday. Thanks very much.